What's up guys, Alvaro here. Welcome to the Bilingual Stock Market channel again. On this channel we talk about the markets and we do it in English and Spanish as well, so you can pick your preferred language. And in this video I want to break down some technicals, so I want to go over S&P 500, Nasdaq 100 and the Russell 2000 as well, in order to try to figure out what direction the markets could be potentially picking next week. And at the end of this video I am also going to break down from a technical standpoint AMC Entertainment, Beyond Meat, Clover Health and Meta Materials. So without further ado, let's get right into the video. And the first index that I want to go over is the S&P 500, which went down yesterday 0.03%, and it closed yesterday's trading session at 4,535 points. And you guys obviously already know that yesterday we got a way worse than expected jobs report. It came out at something like 260,000 jobs created during the month of August here in the United States, whereas the expectations were at 750,000 or something like that. So the reaction of the markets was, for the most part, predictable. The tech sector and the growth sector led the way in yesterday's trading session, and we saw the financial sector, which is a very important sector inside the S&P 500, having a negative day. So if we take a look at the 4-hour chart of the S&P 500, there is absolutely nothing wrong with this chart. The tape looks extremely bullish. However, guys, 1/3 of the stocks that trade inside the S&P 500 are 10% of the highs, or even more than 10% of the highs. So from an internal standpoint, we have a lot of weakness inside the S&P 500. I have been telling you that in the case of this index, only a handful of stocks have been doing the heavy lifting. So now the question is, and since we got a worse than expected jobs report, is the tech sector going to keep on leading the way for, I don't know, 1 or 2 more months or something like that? And keep in mind, guys, that on September 14, we are going to have the CPI data report. That is going to be very, but very important. So if we had a worse than expected jobs report, we could make the case that the CPI data should come out weaker than expected in inflation terms. So that is going to be actually very positive for tech growth and higher multiple stocks if that were to happen. So this next week is going to be very interesting. Let's see if the financial sector can start to recover, and we need to keep a close watch on the 10-year Treasury yield, which didn't drop a lot. I mean, it actually closed yesterday's trading session in positive territory. So we have a lot of things going on as of now on the table, and I think that the markets are going to wait until September 14 to see what that CPI data report is looking like. And remember that on September 22nd, we are going to have the Federal Open Market Committee. And since we got a horrible job report yesterday coming out, I don't think that we are going to see the beginning of the tapering process in October. So this is just a warning. We have a very bullish chart when it comes to the S&P 500. However, only a handful of stocks are doing as of now the heavy lifting, and if those stocks happen to take a rest and the lagging sectors don't pull up, then we have a recipe for a tiny correction in the markets. When I say tiny correction, I am talking about a 5 or 7% pullback. So I am going to zoom in here on the 4-hour chart, and guys, the first line of defense for the bulls in the S&P 500 is 4,500. As long as the bulls remain trading above 4,500, this index is looking extremely bullish. And what is going on over here is simply, guys, a process of consolidation slightly above a very important area of lower support at 4,500. And by the looks of it, the bulls are just gathering momentum in order to make another push higher. And in the case of the Nasdaq 100, we find a scenario that looks very similar to the S&P 500. The Nasdaq 100 was the best performing sector in yesterday's trading session, and it went up 0.31%, closing yesterday's trading session at 15,652 points. We can make the case that the RSI of the Nasdaq 100 on the 4-hour chart is a bit elevated. It is at 70 points. However, if I zoom in here on the 4-hour chart, as long as the bulls, guys, remain trading above 15,500 points, we are pretty much talking about the same scenario that I just told you about in the case of the S&P 500. It looks like the bulls are simply gathering momentum. It looks like the bulls are consolidating in order to eventually make another push higher, and by doing so, break into the upside the new all-time high of the Nasdaq 100 at 15,696 points. But other than that, we are still on a clear uptrend, trading above the moving averages. And mind you guys, the longer the bulls consolidate between 15,500 points and 15,700 points without breaking the new all-time high to the upside and without breaking the lower support of 15,500 points, the moving averages are going to start to catch up, and we are very likely to see another push higher, guys, by the looks of it. So for the bears to, let's say, do some harm in the case of the Nasdaq 100, they need to take on 15,500. But other than that, this index is also looking extremely, but extremely bullish. And now let's go ahead and take a look at the Russell 2000, which actually was the best performing index throughout last week. And the Russell pretty much closed on Friday even, as I am seeing over here. Yeah, 0.00%. So it broke even, and it went, I mean, it didn't go anywhere. It just broke even, and it closed yesterday's trading session at 2,292 points. And this index is also looking very, but very bullish. We are trading above the moving averages. The RSI is at 61 points. So maybe next week we could see the beginning of a process of consolidation slightly above 2,290 points. If that were the case, the bulls could be simply gathering momentum slightly above 2,290 points in order to make another push higher and pay a visit, guys, to a very critical area of overhead resistance near 2,360 points. So let me zoom out over here and take a look, guys, at how 2,360 points is an area of overhead resistance in which the bulls of the Russell already failed on 1, 2, 3, and 4 occasions before. But we are also talking about a former area of overhead resistance that coincides on the 4-hour chart with the upper line of this horizontal channel in which the Russell 2000 has been trading since early February. So the fact that we could be potentially filling this gap up to 2,360 points is very, but very bullish. And mind you guys, what about the Russell finally breaking out of 2,360 points? Which as I just said, is a critical area of overhead resistance. So the Russell is also looking very, but very bullish over here, no doubt about it. And if the Russell happens to be able to fill this gap up and happens to also be able to break out of 2,360 points, that is going to be very, but very beneficial for a lot of meme stocks out there, including AMC Entertainment, which is going to be the very first stock of this video. So AMC went down yesterday 0.81%, and it closed yesterday's trading session at $44. So let me zoom in here on the 4-hour chart, and I already told you guys about the golden cross that unfolded in the case of AMC on August 26th, and this golden cross is still in effect, guys. And why? Well, because the bulls, and despite the fact that yesterday AMC went down almost 1%, and despite the fact that AMC broke to the downside in yesterday's trading session, the lower line of this uptrending channel in which AMC has been trading since August 19. But take a look at how, guys, the bulls managed to find support right at the 50 SMA on the 4-hour chart. So this is bullish, no doubt about it, and this left this golden cross still in effect. So what is going to be the most important task for the bulls of AMC in the upcoming week? Well, no doubt about it, the most important task is going to be reconquer the lower line of this uptrending channel on the 4-hour chart. So I need to see the bulls taking on, first of all, $45.70, and after that the bulls need to take on the next important area of overhead resistance at $48.50. $48.50 is a previous area of overhead resistance in which the bulls of AMC failed on September 1st, and they also failed on August 25th. And the second, guys, the bulls of AMC can take on $48.50. I think that, and since this golden cross is still going to be affecting in a positive way AMC, then I think that we are very likely to see the bulls of AMC filling the gap up to the next important area of overhead resistance near $52. $52 is a previous area of lower support that acted as such on many occasions back in late June and also back in the beginning of June. So watch out for AMC, guys. We can see that the RSI, the Relative Strength Index, is at 52 points, very healthy. And yeah, that's what the bulls of AMC need to do next week. Reconquer the lower line of this uptrending channel and then taking on $48.50 in order to be off to the races. And the second stock of this video is going to be good old Beyond Meat. And man, Beyond Meat has been an absolute mess, guys, ever since the stock of this company reached all-time highs back in January 26th. So Beyond Meat went down yesterday 3.98%, and it closed yesterday's trading session at $114.97, and we are getting closer, guys, to a very interesting area in order to pick up some shares of Beyond Meat at $111. $111 is a previous area of lower support that already acted as such for Beyond Meat back on August 5th, but it also acted as overhead resistance back in the beginning of May. So if tomorrow, guys, and you know that I put my money where my mouth is, if I see tomorrow Beyond Meat paying a visit down to $111 and finding a good support over there, I am very likely to pick up 30 or 40 shares of Beyond Meat, in which case my price target is going to be the next important area of overhead resistance at $121. $121 is a previous area of lower support that already acted as such for Beyond Meat back in the beginning of July. And take a look at the RSI on the 4-hour chart. It is at 33 points, guys. Beyond Meat is about to enter into oversold territory. So we can make the case that if the bulls of Beyond Meat pay a visit down to $111, the RSI is going to be even lower. I'm sorry. And that is going to increase the likelihood for the bulls of Beyond Meat to find support at a previous area of lower support and resistance and then make a push higher. If I can take this trade the way that I am describing it, picking up some shares of Beyond Meat, as I just said, 30 or 40 shares at $111 and selling out of those shares at $121, I could be locking in a profit of almost 8%. That would be a very nice trade to be taken. So watch out for Beyond Meat tomorrow or in the course of next week, potentially paying a visit down to the lower support of $111. And the third stock of this video is another meme stock, guys, that is looking very attractive and compelling. Clover Health. Clover went down yesterday 0.34%, and it closed yesterday's trading session at $8.84. So what am I thinking about Clover over here? I need to zoom in twice and take a look, guys, at how yesterday the bulls of Clover found support right at the 50 SMA on the 4-hour chart near $8.60. And if we take a look at the relative strength index of Clover, it is at 54 points. So it is very healthy from a technical standpoint, because on Thursday, guys, the RSI of Clover had gone up to 72 points. It was very elevated, and Clover Health was very overbooked. However, with the pullback that we saw yesterday, If tomorrow Clover happens to pay a visit to $8.60, then that is a price in which I am going to be tempted in order to pick up some shares of Clover. $8.60 is an area of overhead resistance in which the bulls of Clover failed back on September 1st. They also failed back on August 30th, and they also failed at that area back in the beginning of August. So if I can pick up some shares of Clover at $8.60 once I confirmed from a technical standpoint that that area is providing a good support, which should be the case, guys, because we have the coincidence, the convergence of a former area of overhead resistance with the 50 SMA on the 4-hour chart. So if I pick up, I would say probably 100 or 200 shares of Clover at $8.60, then my price target is going to be the next important area of overhead resistance for Clover near $11.60. So I need to zoom out a bit more. So check this out, guys. $11.50, let's say, is a previous area of lower support that already acted as such for Clover back in mid-June, but we are also talking about a former area of overhead resistance in which the bulls of this stock failed back in late April, and they also failed back in early March. So if I were able to take this trade the way that I am describing it, picking up some shares at $8.60 and selling out of those shares at $11.60, I could be making a profit of almost 33%. And mind you, guys, the short interest of Clover as of now is at 15%. It's not that elevated. So I am not making the case here that the stock of this company is a candidate for a short squeeze, because most of the people that open trades in the case of Clover Health are thinking about a short squeeze, because as of now, I mean, the short squeeze is a bit elevated. It is above 10%. I have already told you here on the channel that any short interest above 10% is already considered a high short interest. But I am not taking that into account over here in order to do my technical analysis. I'm just observing a technical analysis that looks pretty attractive, leaving behind the issue of a possible short squeeze. And the last stock of this video is going to be Meta Materials, ticker symbol MMAT. And in the case of the stock of this company, it went up on Friday 2.42%, and it closed last Friday's trading session at $5.50. So I am going to zoom in here on the 4-hour chart. And guys, if the stock of this company pays a visit tomorrow to the lower area of support or of possible support at $5, because we are talking about a former area of overhead resistance in which the bulls of Meta Materials failed back in mid-July, but they also failed at $5 back in late April, then that is an area. We are talking about, obviously, a previous area of overhead resistance that was broken to the upside and that now is supposed to provide a good support if visited. So at that price, guys, $5, I think that I am going to be picking up 300 or 400 shares of Meta Materials. And why? Well, because we know that this is, for the most part, a new meme stock, and the RSI of the stock of this company went too high, guys. Last week, it went up to 83 points back on September 2nd, and also back on August 30th. So we can make the case that we have a good momentum surrounding the stock of this company, and now the RSI has cooled off a bit and we find it at 64 points. So if tomorrow, and as I just said, the bulls pay a visit down to $5, and I happen to confirm from a technical standpoint that that area is providing a good support, I am going to be picking up, as I just said, 300 or 400 shares, in which case my price target is going to be the area of overhead resistance in which the bulls of Meta Materials, sorry guys, failed on last Thursday at $6.40. Take a look at this, guys. If I were able to take this trade the way that I am describing it, picking up shares at $5 and selling out of those shares at $6 or $6.40, I could be making a profit of 30%. That's an unbelievable profit. So watch out for Meta Materials, guys, because the fact that the RSI is cooling off a bit and the fact that the stock of this company could pay a visit to a former area of overhead resistance are good signs in order to start a position with the stock of this company at $5 per share. And with Meta Materials, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again. So enjoy your Sunday and peace out.